We said the prime lending rate at banks now sitting at 8.25%. It does make your loan repayments more expensive. All right, the rand seems to have responded well to the rate announcement. Last time checked, it was around about 15.84 to the US dollar. The all share is more than 1% in the red, though. Makwe Masilela from Makwe Fund Managers joins me now. Makwe, thanks very much indeed for talking to us. It was expected that 50 basis point hike, but there were some of us that thought, well, perhaps the Reserve Bank will consider what's happening with the economy right now and give us a smaller margin of an increase. It didn't happen, though.
It didn't happen, Devin. Yes, it was more of a disappointment. But as you said in our intro, the rand is happy as it continued to strengthen. I guess the issue here is that we have to continue to make sure that we don't lose that advantage when it comes to interest rates differential between ourselves and the USA. And here we're talking the US dollar. As we've seen, the guys as well, they've increased their rates by 0.5%. And they will be continuing to do so in the next coming 2 meetings or so. But yes, inflation continues to be a concern, as it has been said that basically it reduces the purchase of our currency. But is it helping the situation, the current inflation? Is it because of demand or is it because of supply? Chances are it's more about the supply issues more than anything. Even if you look at our credit extension, you can see that it's not at those high or at those elevated levels.
But I suppose, the governor, again, having no choice because you've got to get currency coming or flows, capital flows into the country. And if that doesn't happen, then we are in a situation where there's just less money entering the country because our interest rate is too low compared to the rest of the world.
Yeah, sure. But you see, the problem is when you talk about especially the main economy and the currency, we don't have a problem increasing interest rates. It's kind of expected. The big issue here, Devin, is the rapidness, how rapid to increase that. Because if you continue to do that, then definitely it's going to damage the real economy. As you guys said earlier, we'll start be paying more on our installments, and that means we'll be left with less money to spend on other things when it comes to the economy, bearing in mind that our economy is more than 60% driven by consumer demand. So we need people to be able to spend money, especially on durable things.
All right, so let's turn our attention to the markets. Now, look, we've taken another beating, I think around about 1.8% in the red for the all share. And again, this is a global situation. A lot of the big shares on the JSE just taking a dive. And we seem to be having these sporadic movements upwards, but overwhelmingly over the past few sessions, this local market together with global markets have been in the red quite extensively.
Definitely, another sell-off. And I think the problem here is the very same inflation that we're all worried about, that central bankers are trying to fight. That itself, it also brings the issue of the economy slowing down. And here we're talking about the global economy. And Devin, we might be entering, or nearing to enter a period of stagflation, or a period where you can say you see high inflation, but weak economic growth. Remember, inflation itself, it starts eating into the company profits, and also it affects your disposable income, you as a consumer, so it's not doing well for you. So markets get to be rattled by all those inflationary concerns and the possible recession that we might be facing. Hopefully they will be able to do the 1994 issue, as we've seen that Alan Greenspan managed to increase interest rates without triggering a recession. And I think the last time we saw stocks, bonds, protected or inflation protected bonds, industrial metals all going down simultaneously, it was around 1981.
Yeah, and then listen, we had some results from Pick n Pay earlier on in the week. The CEO there, Peter Boone, warning flags on the inflation that consumers are experiencing, although they did pretty well, I think, in their results sheet. But then Massmart today flagging the same thing. Revenue is down for them, and they're saying consumers are not really in a great position. It doesn't make sense to listen out for what these big retailers say about the economy.
Definitely. Just looking at Massmart, their selling inflation is sitting at 3.6%. And as you mentioned, Pick n Pay, theirs, I think it was around 2.9%. And I think Massmart are still struggling, to get out of that fallout caused by the last year, July unrest, and also a struggling consumer itself. Their sales, they're down almost 0.2%, but like for like, they're up 2.3%.
Yeah, all right. Well, so we'll leave it there. Makwe Masilela of Makwe Fund Managers. Thanks very much indeed for talking to us. As we said, the market fairly in the red this afternoon. Not very different from what's happening globally, but we did see some strengthening on the part of the rand when that interest rate announcement was made. Let's take